welcome you all to Worldwide Exchanges. Thanks for tuning in. We've built this channel to inform people of economic and global news updates on a more periodic basis than you might find on YouTube. So you can expect at least, weekly updates that we bring to you. And the reason we call it Worldwide Exchanges is because there's such a great worldwide presence on YouTube from people in all different types of countries and all over the world, and the insight that you can bring to enlighten people that have no idea what that type of local economy is phenomenal. So we're very excited about this new channel. What we do is we'll bring information from the Wall Street Journal, Barron's, The Economist, and we're very excited all that can provide input on global markets. I personally have been trading for the last 12 years and focus on world economic issues that I can seriously benefit to my advantage, financially. Worldwide Exchanges issue number 1. Reuters reports dollar soars to 5-month high versus euro, which is trading right now at euro to the US dollar 152, about 152.20 in change. That's about a 7-week high right now, and largely in part we just had about about 2% drop today. The ECB decided to keep rates at unchanged at 4.25%. Investors rushed back to cover the greenback, their short positions. The Australian dollar shed about a percentage. New Zealand dollar lost 2%. And a lot of people are speculating with the commentary that came out of the ECB that they're talking about a pretty serious slowdown the second half of 08 and into 09. And I don't know. What do you guys think? I possibly might think that the worst is over in a global base for the U.S. and we might start seeing at least a serious short cover rally on the U.S., but maybe that everybody's seeing kind of the U.S.'s screw up filtering through the world right now. So I don't know. I mean, I've made some good money being long the euro versus the dollar. I rode it up from about 156 up to about 160 where it hit the high. But I don't know. Is it time to go long the US dollar? I'll see what you guys think. Issue number 2 is the mortgage crisis. Not over yet, obviously. I know a lot of you are pretty sure about an economic collapse here in the US. Right here, this is, you guys can see this, I think Wall Street Journal. Basically, this report came out, said delinquencies worse than 2006 vintage. This came out today, August 7th. Hey, CL, let me call you right back, dog. I'm in the middle of my YouTube shoot. No, that's cool, bro. I'll hit you up in a sec. Later. So mortgages made in 2007 go bad at rapid clip. Mortgages issued in the first part of 2007 are going bad at a pace that far outstrips the 2006 vintage, suggesting that the blow to the financial system from U.S. housing woes will be deeper than many people estimated. This is pretty interesting here. An analysis prepared for the Wall Street Journal by the Federal Deposit Insurance Corp shows that 0.9% of prime mortgages from 2007 were seriously delinquent after 12 months, meaning they were in foreclosure or at least 90 days past due. For the equivalent figure in 2006, which was only 0.3%, so about 3 times delinquency rate in 07, first half 07 mortgages as opposed to 06. And then data on other classes of mortgages suggests the same trend over at Freddie Mac. They reported Wednesday that 1.38% of 2007 vintage loans it purchased were seriously delinquent after 18 months, compared with 0.38%. So roughly, you got about a 400% increase from '06 to '07. And then later on in the article, it talks about how really the credit markets didn't tighten up until, you know, August, September of '07. So, you know, this thing is probably going to be definitely a few more months. But I personally think we're starting to see a little bit of a bottom. I don't know. I really just don't believe we're going to see less than Dow 9,000. So we'll see what you guys think on that. If you can comment, bring some input there. Last thing I want to talk about on this episode is, what is it? Oh, yeah, AIG. Okay, so AIG reported just an awful loss. I mean, just awful. Let me go grab it, actually. All right. Okay, so this report's out of the Journal too, okay? Okay. You see this right here? Wham bam. Right there. Okay. Okay, right there. That little guy, Robert Willem's dad. Okay, don't know who that is. AIG posts $5.4 billion losses. Housing woes continue. I thought AIG was like car insurance, but they insure everything, I guess. Anyway, what they're saying is they reported its third consecutive multi-billion-dollar quarterly loss. $5.4 billion underscores the continuing problems the troubled housing market poses for the insurer. You know, for those people that watch Man of Truth's channel, in 2007 he called the Bear Stearns collapse when Bear Stearns was about 130 or whatnot. Nice call. You know, AIG doesn't have that much to fall, but at 26, 27, it might be a pretty good opportunity to look at either way of AIG. I mean, it could just become, it could go to zero, like some of these other financials. You got your Countrywide. I mean, the list goes on. Freddie, Fannie. So take a look at AIG, and I'm going to be looking at it tomorrow to see how it reacts. But if we see it down another, you know, 5 to 10%, I might just jump on the bandwagon and start buying some puts on that. As well as we need to look at the currency situation here and really figure out if you know, this was just short covering from the dollar. I mean, it's moved 800 pips in the last 7 weeks. That's some serious cash for you currency traders. So that's kind of want to get some thoughts, guys. Welcome to Worldwide Exchanges, and we are very excited to bring you news and current events here coming shortly. Thanks, and everybody stay tuned.